Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. One more thing before we get started, you'll see in the description of the video there will be this section here, which is click on this link for descriptions links to the other videos mentioned in this preview on different topics about the SPX indicator. So this is a Google Drive link. I'll show you where it takes you to now. So when you click on that link for the Google Drive, this is where it takes you to, which as you'll see is a list of different topics and links to the videos on the specific topics. These topics go into more detail. We may reference some of these topics very briefly in today's video, but when we reference to go look at the video that provides more details, then you'll just simply click on this link and go to here, and then you'll be able to click on the link that you want to see a more detailed video on a certain topic. Thank you. Hello. This video is going to be going over some specific topics regarding the SPX Daily Key Levels Indicator from Day Trading GPS. For more information and to see full detailed videos on how this indicator works, what all of the key levels mean, and how to trade with this indicator in a more full detailed video, please watch one of our other session videos, the links to which are in the description of this video. The purpose of this video is going to be just a short video which is going to go over bullish and bearish trades in the same session, as well as taking trades off of one of the other main R or S levels besides the main bull-bear key price level. Okay, so in today's session, Friday, November 7th, 2025, there was both a bearish trade opportunity and a bullish trade opportunity given by price action in this session. The initial trade opportunity was a bearish trade opportunity off of the 9:30 a.m. opening candle. We do have a video that is on the full November 7th, 2025 trading session, which goes over this trade till its finality. At the time that we made that video, it was mid-afternoon and the other trade opportunity had not presented itself. However, this session proved that there was indeed another very good trade opportunity later on in the session after lunch, and so we thought this would be a good time and a good session to go over this topic. So we're making this video as an addition to the other video. If you would like to see the initial November 7th, 2025 trading session video, which goes over all the details of this trade here, of the initial bearish entry, and also goes over more aspects about this indicator, please look at the link in the description of this video for that particular one. Also, there are other videos to other SPX trading sessions in which we go over an expanded view of this indicator that will explain all the different key levels, what they mean, how to trade with the indicator, and how to manage your trades level to level. So to see a more full version of how to understand to trade with this indicator, please see one of those other videos, as this video today is just going to focus in on these specific topics. Okay, so the initial trade entry here was a bearish entry on a cross below, close below of the bull-bear key price level. So even though the session bias initially is a bearish bias from this close below the bull bear KPL. Please keep in mind when using this indicator, that does not mean that you are taking bullish trades completely off the table. It really just depends on what types of trades that you're looking for, scalps versus regular trades. And also what price action is showing us in the session. So keep in mind that even though the initial bias here is bearish, that does not mean that you cannot look for bullish opportunities that are below the bull bear KPL, because in reality these will be discounted opportunities for a return back to the bull bear KPL or perhaps above, as we saw today. Or in the case of scalps, scalping trades can be just from one level to another level. Conversely, you can also have bearish trades above the bull bear KPL, as we've shown in other SPX trading session videos, where we've had some very big trades that were bearish trades off of the R2 level. So keep in mind that this is basically the initial bias of the session. That does not mean that you cannot focus on other trades that would be bullish if we have initial bearish bias, because there will be in many sessions bullish opportunities that are below the bull bear KPL for price rising back up through the different key levels and perhaps to the bull bear key price level and beyond. And the same thing in reverse. If we have a bullish session where the initial bias is bullish, that does not mean that you cannot look for bearish opportunities, either scalps or regular trades, at the levels above, because in many cases those will be discounted bearish opportunities, much like these are discounted bullish opportunities later in the session. Okay, so this particular trade here, this bearish entry, you had both a scalp exit here, you had the minimum 1.50 level regular trade move. Again, we're not going to explain all the little nuances of this particular indicator and the trading strategy in this particular video. This video is primarily being made for people that are already subscribing and using the indicator. However, it's also going to be useful for new subscribers who want to look at this particular topic. So if you're brand new and this is the first time you're looking at this indicator and you have not already purchased it, then I would recommend that you look at the other SPX session videos and then perhaps come back to this video. Okay, so we have the bearish opportunity. We have the one level move here for the scalp exit, and we have also in this candle the 1.50 minimum required move for a regular trade, which triggers all of these different options here on the regular trade for managing that trade level to level from that point on, versus scalps, which are 100% closeout only with no adjustments and no continuation. That is the main difference between a scalp and a regular trade. A scalp is a one level move in your favor from the level that you're trading. In this case, the bull bear KPL, one level down on a bearish trade to S1. The 1.50 level move was down to mid S1, S2. At 10:06, we got the full two level ideal move for the regular trade. And then at 11:14, we got the mid S2, S3 hit, which was a 2.50 level move. It did not quite make it down to S3. That's when we started seeing a potential turnaround here as we went all the way back up to S2, then backed off. Remember, with this indicator, your trades are taken off any of the main R or S levels or the main bull bear KPL. So we're looking here, since there was no touch of S3 and thus no bounce off of S3, then what we're looking for here is to see if price action is showing that it can break through S2 and start closing above, consecutively above S2 for a move potentially at least to S1 or beyond. So in this zone here, from 1:08 p.m. to 1:18 p.m., this would be considered the entry zone, as we did see a close above here and some retesting going on. And then here at the 1:18 p.m., we also had this larger candle here. So initially here, this is the 1:08 p.m. candle. So the entry zone is within here. A more aggressive entry would be taking this as a standard trade entry on just a close above. However, since we had the initial bearish bias and we had a move down several levels, and then we had a rejection here when it tried to go up the first time, and then this mini rejection here, the more prudent thing to do is to wait for additional confirmation, which you have with these additional candles. Additional confirmation would either be this candle here or this candle here. The stop losses on this trade are as follows. The tight stop loss, just like any other trade on a bullish trade from any level, a bullish trade from any main level, your tight stop loss is the QL level below that level. So if it was a bullish trade off of the bull bear KPL, the QL below the bull bear KPL is your tight stop loss on that trade. If you had a bullish trade on S1, then tight stop loss would be the QL below S1. So on S2, the tight stop loss on a bullish entry is the QL below S2. The standard stop loss is the midpoint below the level that you're taking the trade on a bullish trade. So that is this midpoint here, mid S2, S3, which the label is sort of blocked by some of these candles here, but you can still see the price, 66.43.41. So a bullish trade off of S1, your standard stop loss would be mid S1, S2. A bullish trade off of the bull bear KPL is the midpoint below, mid BB-KPL S1. And if you took a bullish trade off of R1, the standard stop loss would be mid BB-KPL R1. Whereas the tight stop loss would be QL below R1. Okay, so in this entry, the aggressive entry at 108 would be 1430 on that candle close. Waiting till 118 after more confirmations, your price on that candle close is $15.40. At 1:38 p.m. we have a one level move up to S1 for a scalp only. This would be a 100% closeout trade on a scalp only. Per our rules on scalps, there are no adjustments and there are no continuations. You just close out your contracts, however many you have, and then you can move on to the next trade. The price on this candle close was $24. The profit on this, we're taking the highest price entry. The highest price entry in this zone was this additional confirmation candle here, in which you were paying $15.40. So the profit based on the $15.40 price at 1:18 p.m. entry is $860. As you can see, after that, we did get a move back down. However, you're already out because you closed out your scalp. As you can see, it only moved down and stopped short of the S2 level, so neither one of these stop losses was ever in jeopardy on this trade. Here at 2:30 p.m., it hits the mid BB-KPL S1 level. So that is a 1.50 level move from the level we took the trade from, S2, to this level. That is the regular trade. That is the minimum required 1.50 level move for a regular trade. And then you have these options: either 100% closeout, or adjust your stop loss on all your contracts to break even, meaning the price you paid for the option, or break even plus a 10 to 15% initial profit buffer on top of break even. So when you're doing your adjustment on a stop loss, it's now price based on the option. Your initial stop loss is based on levels. However, when you hit on regular trades your minimum required 1.5 level move, then you are switching to a price based stop loss, which is at least moving your stop loss to break even, the price you paid for the option, or break even plus a 10 to 15% add-on profit buffer. Or if trading multiple contracts, you can close out 70 to 90% of them and adjust the stop loss on the remaining runners to break even, or break even plus the profit buffer. So it's either 100% closeout, or adjust the stop loss on all your contracts, or if trading multiple contracts, you can close out 70 to 90% of them, adjust the stop loss on the remaining runners. Then at each succeeding level move in your favor, after the initial minimum required 1.5 level move, you have the same options and decisions to make at each succeeding level in your favor that price reaches. If you already adjusted the stop loss at the minimum 1.50 level move in your favor, then add additional profit buffer at each level move in your favor on any remaining contracts that you do not close out at each succeeding level move in your favor. So here at 2:34 p.m., well, first off, let's look at the profit here at the 1.50 level. $1,859 per contract. The price on the candle close was $33.99. At 2:34 p.m. it hits the BB-KPL. This is now a 2-level move, which is the ideal minimum regular move. We explain more about the minimum ideal regular move in our other videos, but it is simply, in most cases, that is going to be where you would like to close out 100% of your contracts if we have either moderate volatility or normal volatility. On high volatility days, then there is a likelihood that you will see a move exceeding the 2.0 levels. Whereas in 80% of the sessions that are just your normal to moderate or low volatility, then a 2.0 level move in your favor is typically going to be the end of the road. However, that does not mean that you have to get out of your trade after the 2.00 level. This session in particular was a higher volatility session, and even if it's not a higher volatility session, as long as you are properly adjusting your stop loss and or you've already scaled out, because remember, if you've scaled out here 70 to 90%, you already took out the full profit at the 1.50 level of 70 to 90% of your contracts, and now you're just dealing with remaining runners. that at least have a stop at break even or break even plus a profit buffer. So for you to see if you can get a move up to another level in your favor, then as noted down here, if you've already adjusted the stop loss at the 1.50 minimum required level for a regular trade, then you can add an additional profit buffer at each succeeding level move in your favor. So this is a succeeding level move in your favor. So if you want to stay in the trade, then you can adjust your stop loss further by adding on an additional profit buffer. And here at 2:40 p.m., it hits all of these levels all in the same candle. It hits the mid BB-KPL R1, it hits the YDL level, and it also hits the R1 level. Remember, this started at S2, so now we have both the 2.5 level move hit and the 3 level move hit, because it's 3 levels from S2 to R1. The call price on this candle close for the 66.60 call, which I may have skipped over that earlier, and if I did, I apologize, but it's the same thing here. You are taking the at the money strike closest to the level that you're trading. That is the standard play. Just like it was here. The standard play was the at the money strike closest to this level, because this is the level that we're trading. In this case, this was a put. In this case, this is a call. The closest strike is 66.60. If it's a bullish trade, then it's a call. If you were looking for out of the money call strikes on this trade instead of the at the money standard play, then you look up to the next midpoint, 66.69.74, and you would instead look at the 66.70 call. And then finally, the furthest out of the money call would have been the S1 call, the call based on the S1 level of 66.78.52. The closest strike to this level is the 66.80 call. So that would be the furthest out of the money call you can consider for a bullish trade taken from this S2 level. The out of the monies present an opportunity to spend less money and still get in on the bullish trade. However, you have to keep in mind that it is getting later in the session, because this is happening around 1:10 to 1:15 p.m., specifically 1:08 to 1:18. And now there's only going to be roughly 2 hours and 15 minutes or so left in the session. So you want to be cognizant of that fact as well. So even though these cost less money, it's going to take more of a move for the out of the monies to generate as much profit as the at the money. However, they do cost less to begin with, so you will have less money totally at risk. And whether you're using the out of the money calls or the at the money call, your initial stop loss, remember, is level based. So your initial stop loss is going to be the same regardless of whether it's the at the money or one of the two out of the money. Okay, so back to this. The 60, and if you want to see what these are, just go look at the timestamps. I did not do that in this particular case, but you can look at the timestamps for the 66.70 call and the 66.80 call for entries between 1:08 p.m. and 1:18 p.m. and then simply look at those data boxes for those options on a 2-minute chart for those options, and then what the closing prices were at each one of these candles. Okay, so here we have both the 2.5 level move and 3 level move. The 66.60 call price on the candle close is $52.37. That's a $3,697 profit per contract. So whatever contracts you had remaining here, if you wrote it up to here, then that is the profit on those. Next we have it hits the YDC level. If you've seen our other videos, we talk about the importance of these other levels, the PML, the PMH, the YDC, the YDL, and the YDH levels. Those levels have several reasons why they're important, but one of the reasons, which you can go back and look at the other videos where we go over the different reasons for their importance. However, for the particular purposes of this video, the specific importance here is where they are in relationship to the beginning of the trade. So once a regular trade meets the 1.50 level minimum move requirement, then if any of these levels occur after that 1.5 level move has been achieved, if any of these levels are in the direction of price continuing to move in your favor, they also become additional waypoints for decision making, much as you see here. So these would also count as each succeeding level in your favor. If they happen to be in the direction where price continues to move in your favor, and if they occur after the minimum 1.5 level move has occurred. So here at 2:58 p.m. we have a touch of the YDC level, which is yesterday's daily close, specifically the previous day's RTH session close. The candle close here is 59.50, and the profit on the worst case 1540 entry at 1:18 p.m. is $4,410. Okay, so that is going to conclude this video. I hope this has been helpful. If you have any questions, you can email us at daytradinggps.com. Excuse me, you can email us at daytradinggps@gmail.com. Also, if you are interested in purchasing this indicator, you can send us an email to daytradinggps@gmail.com and request a discount promo code for your purchase. Also, if you have not seen the other videos, as I said before, then you can look to the description of this video to see other videos that are full session videos on the SPX Daily Key Levels Indicator, which will go into more full detail about all of the key levels and a lot of other aspects about this indicator. Alright, well, thank you for your time today, and I hope you enjoyed the video. Please like the video, and because that helps us with the YouTube algorithm. And if you'd like to be notified of when we have other videos posted on various topics regarding this indicator, or for new trading session videos regarding this indicator, please subscribe to the channel. Thank you.